Rajesh Jejurikar, Executive Director, CEO with Auto and Farm Sector, joins us now. Nice to have you back. Thank you for joining us. We would always start with SUVs, but today there is a lot of good news on tractors also. Yep. What do you want to start with?
Your call, Nikunj. Firstly, thanks for having me on the show.
Thank you.
The uptrend continues. Despite whatever we are talking about demand sluggishness, that has not impacted at least your business.
Yeah.
Why are you growing when the industry per se is not growing?
So Nikunj, I think you're right in that we've grown much faster than the industry, both on the auto and the tractor side. So let's first take the SUV piece, where we in the quarter grew 20%. The industry was much lesser. We've gained market share, and our actually revenue market share now in SUV is about 23%, which is quite substantial. But what's really interesting is that in spite of the price points that we have, which are way above the average price points of the industry, we are still number 2 on volume share. So we're still a very large volume player, doing about 50,000, 48 to 50,000 a month. And we always believe, and I'm sure you'll want to know that in the context of the EVs that are coming as well, which is demand gets created by products, and products create excitement with customers or they don't. And we've had a series of good launches. So the reason we are growing this year is 2 very good launches that happened in 2024, the 3XO, and we were weak in that segment, which is the subcompact less than 4 meter segment, and then the Roxx. So both of these have done very well and added volumes for us, while we've kept the rest of the portfolio strong and robust.
But Rajesh, let's first focus on tractors. What gives you the kind of conviction that the demand is going to remain strong at a time when we're talking about a overall rural slowdown?
Aisha, I think the rural slowdown we're coming out of, based on everything that we've seen. The country's seen almost 18 months of rural slowdown, and starting with the festival season sometime October, we've kind of seen demand come back, and that's sustained. The drivers of that have been a very good rainfall, and though it came late in some parts of the country, overall the rainfalls have been very good. So Kharif production was up. Rabi sowing is on track, which means like most of the Rabi areas are on track. Reservoir levels are at almost at an all-time high, significantly above the LPA. So all of these are positive factors. Then there are the terms of trade, which drive sentiment. Terms of trade is basically output inflation over input inflation, right? So that is what basically, in a way, represents the margin that the farmer is making. All of these have been positive factors. So one of the reasons rural was slow as well was the very relatively low spending in the rural economy on the agriculture. Both the agriculture and the rural development spends had come down. That has started picking up. So several positive drivers for the rural economy, and I think that's being picked up in multiple sectors. We hear that even in the FMCG and so on, where people are beginning now to see a faster growth in rural than in urban.
Okay. Now, you are growing when industry is not growing, and the economy per se for the quarter gone by was not in a fantastic shape. I would have a glass half full approach now. The base effect would kick in. Impact of RBI policy, impact of tax cut would kick in, which means things will normalize. So if you're growing in a tough environment, when things normalize, what happens to growth?
Now, are you talking tractors or SUV? Because the answer would be different.
Both actually.
So let's take the tractor question first, since we just left off on that. We're not getting into right now yet a numeric outlook for next year, but we've also gained market share this year. So we are now close to 44% market share. Now, when you're on a high market share in a segment where shares are typically very sticky, this year we've grown cumulatively April to December about 1.7 share points, which is quite substantial in tractors. So one of the reasons which is driving our pace of growth faster than the industry is also that we have gained market share in tractors. I think it'll be too much to say that we will continue to gain share on a high base, but even kind of a strategy and approach of doing things to keep us on track on share, and we would expect the industry to get into a growth, continue its growth momentum for the reasons I just explained to Aisha. So that's on the tractor side. On the SUV side, I think the growth now will come out of the electric origin SUVs that we're just launching. We revealed them in November, and we opened bookings on 14th Feb. we believe that that is going to open up a new segment, and I'm going back to products being segment creators. We're seeing that the profile of people coming in are neither, but certainly not those who had planned to buy an EV. Very few of them were in the, I'm waiting for an EV. A lot of them are into, we're looking for an exciting offer, good looking, stunning design, tech, performance, and they're seeing all of that. There's also a lot of pride about an Indian company being able to bring out products which look very international and feel very international. So that's bringing in. So there are several people coming into the basket of consumption who were not thinking about buying a car right now at these price points. So we believe that will drive growth for us as we go into next year.
So 2021 was XUV, then it was Thar 2-door, then it was Thar 4-door, then there was the SUV, pardon me, I'm not able to
3XO.
3XO, thank you very much.
And then
3XO,
Roxx.
which was again a great launch.
Yeah.
So this year is all about EV from the Mahindra stable. The headlines would be all around EVs.
Yeah, so I'll just recap this portfolio. So I think the first really good launch was 2020, which was the Thar 3-door. Then we had the XUV 700, which has done very well. Then we had the Scorpio N, which did very well. Then we did the 3XO, and 3XO is actually very interesting because that in that segment, which is a very large chunk of the market, we were actually the number 5 player. And we've kind of said in 2 to 3 years we can be number 1, and we're now doing close to 8,000-9,000 vehicles of that per month. And then of course we had the Thar Roxx in August last year. So it's been five very good launches over the last 5 years. Now we'll of course have to consolidate on these and so on, but the growth driver for us in this year is really the 2 new electric origin SUVs, and that's the first time we've launched 2 products together.
But it's a different price point also, right? Like
Yeah,
you said,
correct.
a larger
Yeah.
pool because of affordability now. So do you focus on that, or will you continue to focus on the XUV 700 price range as well?
Well, actually, if you look at the price range of the electric vehicles and the on-road at an on-road price level, the EVs are not that expensive because you can get a B6 on-road comfortably at less than 30, and unless you're going to the top end of the XEV 9e, you are not crossing 30. You can still buy a version of that in less than 30. So there's actually a fairly substantial size of market between 22 and 30 lakhs that's there. One of the reasons we've kept the higher end version also at about 30 lakhs is actually, if you think about it, between 30 lakhs and 55 lakhs, there's actually really no option. So when you think about cars in the Indian market, once you cross 30, then you're going into the 50 plus range.
Yeah.
So actually there is really a product gap.
There's a gap.
Between 30 and 55. And there are many consumers who have the buying power to go to 55 but don't really want to spend that. And I often give the analogy of expensive watches. I mean, many people can afford expensive watches but don't want to buy what they would consider an expensive watch. And in a way we cater to consumers of that kind, which is really they should see value in what they're getting, and we try to price ourselves around that.
So I remember on the same forum we had a similar conversation when you had taken the prices of XUV, the variant down, because you said exactly the same, that the acceptability with this kind of a brand with my customer is going to be less than 40 lakh rupees.
Yeah.
Now there's a huge gap which you've identified, the 30 to 50 or 35 to 55 lakh category.
Yeah.
Do you have ambitions to come up with something there? Because that could change the game, and then you take head on with a BMW, with a Mercedes, because you take them head on.
Yeah, so in a way the XEV 9e and the B, in a way it does that, right? Okay. Because it is, just walking back to the time when we did the reveal on 26th November, and we actually compared ourselves with 4 global luxury brands, where on multiple sets of parameters, all electric, multiple sets of parameters, we are actually very comparable to them. On day 2, on 27th of November, we actually did a demonstration of how we are better on multiple things, including, on our track, speed performance race, a drag test, and all of that. Yeah. And just to qualify, just so that it was fully objective and transparent, we had used IDIADA, which is one of the top testing agencies in Spain. And they were the ones who oversaw that whole demonstration in a way that was completely objective. It was their drivers So it's not like, we kind of said, okay, we'll use a certain kind of driver for our car and certain
Rajesh,
kind
you
of
also
driver.
drive very fast. But anyway.
But I was not in the car.
So let's look at the Mahindra stock. It's just been a massive re-rating which has happened for a variety of factors. Non-core focus shifting away, auto doing extremely well, other subsidiaries kicking in very smartly. There are a lot of times when the environment is also interesting, the tailwind just multiplies.
Yeah.
So what is the next tailwind for you? Because that SUV market share trajectory has been on your side. The fact that you've really cut across all platforms from 35 lakh rupees to as low as 10 lakh rupees, that is something which we know. Your EV portfolio, which you've been speaking about from 2.5 years now, will see the first time that test and a response from a customer.
Yeah.
What is next? I mean, shareholders would always say, ab kya bhai, next batao.
Yeah. The interesting thing about a question like that is we must keep some mystery open as well. Sometimes just consistency of performance and delivery is also what shareholders look for. And I think one of the things that we are always focused on is consistently delivering what we say and keeping a track record of performance execution in play. And when we are executing well, then people see consistent outcomes. And tractors is a very good example of that. And we often, in every analyst meet every quarter, show our margin performance compared to industry growth rates. And irrespective of what's happening to industry growth, we've been able to demonstrate a 17 to 19% margin profile. Now that is delivering consistently. When you see an industry upside that you get to the 19-20% kind of margins, but even when it's not, we are able to stay at 17 typically or not go below that. So it's also the consistency of delivery of an organization. I'm sure shareholders value that as well.
But Rajesh, you've gone on record saying that you're not looking at a demerger. Shareholders would ask, why not? Because that will be a big value unlocking and the next big trigger for the stock perhaps.
Yeah, I think we have to do what we believe is right for business. And sometimes if you believe that what is right for business is to keep two businesses enabling each other to derive synergy
Off
each other to the extent that they are right now. You don't want to just do something because it may seem to be the right thing to do. You have to believe in doing the right thing, I guess.
Let's talk about the customer here. Post-COVID, there was more demand and little supply. Then we saw discounts which made a comeback across industry. Then we saw smarter and better EMI schemes, which in a sense were the dominant feature post Diwali and at least in December. What should a customer expect from the SUV market now? Competition which would benefit a customer or products which will continue to trade at a premium?
Competition, I think, is always good for customers, and we're going to see that in the EV space as well. The EV space, didn't have, and many people talk about why EV penetration has been low in India in passenger vehicles. It's just been 2%, and our view has been lack of the right products which excite customers. We're beginning to see some really good products. I mean, we have two good products of ours, but our competitors too are coming out with good products. And we believe that's going to be good for the category. It's going to be good for customers as the ecosystem then strengthens on the volume growth, right? So when we say there's no charging infrastructure, they have to go together. You need a set of products which customers are excited about. That was what will propel the movement of charging infrastructure. So I believe that, it is actually good and healthy, and that's one of the reasons why we see in the conversation we were having earlier on why we've seen SUV market penetrate the way it has as a part of the passenger vehicle market, because we've seen some really good SUV products, and that's helped people buy SUVs instead of buying sedans or hatches or whatever.
Okay.
As a percentage of your portfolio, where do you see EVs be at, say, in the next 2 years?
Between 20 to 30% of our SUVs will be EVs is what we are working towards.
Again, if I introduce Mahindra and Mahindra, just for our viewers, it is like this solid focus on SUVs. We will not you got to leave
No,
early? I have lots of questions for you.
I have lots of time. I have lots of time. No,
No,
no.
I'm just saying that I introduced Mahindra and Mahindra as a company which decided to only focus on SUVs. You took a big bet and that has really worked like a charm. Uh, but for a company like Mahindra and Mahindra, 5 years from now, what is better? A focus on EV or a portfolio which is 50% and higher coming from EV? I mean, what will create more more value for your shareholders as this entire migration starts?
Yeah, it's the starting point is what will create value for customers, and whatever will create value for customers ultimately will create value for shareholders. The one conscious call that we've taken is let's not try to second guess the customer on EV versus ICE penetration. We've got to have a good EV portfolio, we've got to have a good portfolio of ICE. And which is why we've taken a very conscious call that we will sell EVs and ICE in this, at least the first 2 or 3 years from the same showrooms. It's a,
Or you may have different showrooms also.
not for the first 2 to 3 years.
Okay.
Right? Now, the reason for that is that customers should be able to choose what they prefer. So, if you have a separate EV showroom, just as an example, then the customer has to pre-decide that I want an EV, go there, then decide no, it works or it doesn't work, and then go to another showroom of yours or someone else's. Maybe you lost the customer by then. What we are kind of saying is come in, you may like say a Scorpio N, and then you may say why not take an EV along, or you may go in getting drawn in by one of the new electric SUVs, and then you say but why not buy a Roxx as well, or why not buy a 3-door, but you're leaving the customer with that choice. And I think that is what we believe is in the best interest of customers. And if sometimes when we over analyze the cannibalization and try and second guess the customer, I think at the end of first the customer loses and then you lose as well.
Okay.
What's the customer at large veering towards? Is there more preference now towards EV SUVs, at least in the bigger cities?
I think that will evolve with time, Aisha. So just to recap our strategy,
Sure.
and since Nikunj said he's not in a hurry and I'm not. So just to recap our strategy in EVs has been, we are not first selling EVs, we are first selling lifestyle vehicles.
Yeah.
So our SUVs, electric SUVs are lifestyle vehicles. They are about design, they are about tech, they are about performance, very good quality of premium interiors. So you're getting customer to buy a category of SUVs which touches them emotionally. Then you got to kind of say, okay, what are the barriers because it's an EV? And then we said there are 3 rational barriers that we have to overcome. The biggest is range anxiety and the second is charging infrastructure, both of which go together. So we kind of started by saying hence we need a 79 kilowatt hour battery, because that is enabling customers in real world conditions to get more than 500 kilometers range. For most Indian users, you don't need to charge more than 3 times a month. Very few people drive more than 1000 kilometers a month. Unless you are in the fleet or whatever, right? So
3 times a month.
Yeah, because 500 kilometers. Now, if you use 1500 kilometers a day, I mean, just in my situation, I live in Bandra, work in Kandivali, right? Now, that itself is just 30 kilometers a day or 40 kilometers a day. So, even in that kind of commute, I don't need more than 1500 kilometers. So, you don't need to charge more than 3 times a month, right? So, straight away takes the barrier out of EV charging, because then you're saying, okay, 3 times a month you're going to figure it.
You can do it.
Yeah. The second is fast charging. So fast charging 20 to 80% is just 20 minutes, right? So even the 3 times, if you are able to get either in your office or in your society a fast charger, then it's just 20 minutes. The third is the battery life, and that we are covering ourselves with a lifetime battery warranty. So in a way, you're saying the primary marketing task has been to create an aspiration and a desire to own something which is a lifestyle SUV. It happens to be an electric. Now, because it happens to be an electric, you need to overcome some rational barriers. And these 3 things in a way overcome the rational barrier.
Okay, so I'll wrap it up with one final question. There are a lot of interesting trends at a global level. One, this whole entire tariff issue, which surely indirectly or directly could have impact on where you are exporting.
Yeah.
Second is this whole talk about global EV cars which could come to India. I don't know whether it will happen or not, but there is a fear in the market that 5 years, a lot of global international EV players specific to EV, they may find their easy entry into India. that could change the way how the EV businesses in India would move.
Actually, it will be good, and we always been saying that and I, in a way, I've said that a little earlier. Good competition will create the category.
But that's disruption. That's not competition. A Chinese company like BYD comes into India, get a free hand. That's disruption.
So I think the way the government has drafted the EV policy needs an investment for Make in India.
Okay.
And that is a fairly, I think it's a fairly well drafted EV policy, because with the Ministry of Heavy Industries, they need to lock in what their investment is going to be and back that up with a bank guarantee to ensure that they make that investment and they are localizing. Once you localize in India, then it's a level playing field, because they have to play to India volumes or whatever they export from here, but it becomes a level playing field. So it's not like you can import something without a quantity cap and then dump it here and make India a dumping market. So I think it's a well drafted policy. It encourages competition, but with a level playing field, and which is really what our requirement was. So all we are saying is competition is welcome, but let it be a level playing field.
And could there be any large disruption which could happen on the battery front, or perhaps what MG is trying to do in terms of giving you a fixed vehicle at a fixed rate? There are very different disruptions which are coming. It could come, I don't know how. Is that a fear for the EV market?
So I think you're referring to the battery as a service thing, which MG did as one area, right? So our equivalent of that, and you spoke a little about financing schemes earlier. So one of the things that we are doing with our electric SUVs is keeping the EMI of the top end version the same as the EMI of the entry version, at 39,000 and 45,000. And then you have a ballooning payment at the end of 6 years and flexibility to pay in between. So basically you're saying, in a way, encouraging people to move to the best of the offer. So at 39,000 or 45,000, you can own either of the top ends. That gives you 79 kilowatt hour, that gives you all the features, auto park, so on and so forth. And then you're getting customers to experience a really good thing. So, we do our little bit of innovation as well.
Well, I will not increase your commute time to Kandivali. We've already added 2 hours more, because you have to come from Bandra to Voli and then Voli to Kandivali.
Yeah.
So thank you very much. 2 hours of more office travel for you, but I think it was worth it, right?
Thanks. A pleasure to be here with you in person.
Thank you. Thank you so much for your time.
Thanks.